The government expects the economy to expand by 6.3% in 2019, a slight gain from the 6.1% estimated for the year 2018. In his State of the Nation address, President Uhuru Kenyatta said the wholesale and manufacturing sectors will be key drivers of this growth. Julian Samboko with more.
In his annual stocktake of the state of the economy, President Kenyatta was on a strikingly optimistic note, touting the state of the economy as robust and resilient. In particular, the president cited the general slowdown in inflation and a stable foreign exchange environment as indicators of a sound policy environment which should support growth in 2019.
2018, economic growth was largely driven by the wholesale and retail trade, real estate, information and communication, and tourism.
When you look at the fundamentals, particularly the current account deficit, we've seen it narrowing from a year-on-year basis, and rightfully so because of the diaspora remittances, and also oil prices are coming off significantly.
The State of the Nation address dealt with a raft of issues on the economic environment, including inflation, the shilling, and the wider business climate. One issue that was scarcely touched, however, was the question of public debt, which has been a matter of growing concern over the last 2 years. The public debt now stands at about 5.3 trillion shillings, and with the $500 million 2014 Eurobond set to mature in June this year, there has been a rising concern over Kenya's planned borrowing to settle the debt. It is, however, viewed that Kenya's position remains broadly favorable from a debt position.
We are relatively optimistic regarding Kenya's ability to meet its external debt obligations. When we look at the FX reserves, for example, they are comfortably above $8 billion, 5 months of import cover, above the EAC East Africa criterion of about 4 months of import cover. So we're in a comfortable place to be able to service the debt.
With the State of the Nation complete, small and micro businesses now await implementation of the promised credit guarantee scheme aimed at supporting their access to credit, especially as the future of the cap on interest rates remains unclear. Julian Samboko, NTV.